It was the pandemic IPO of 2020, but will it live up to the hype? Here to share with us their big plans, we have with us Converges COO, Jesus Boboy Romero. Good morning, sir, and welcome to the broadcast. Good morning, sir. Welcome to the broadcast.
Good morning, sir.
Hi, good morning. Again, thank you, Danny and Jester, for inviting us to your show.
Sir, we're very excited to have you. It's our first time to have Converge here on Business World Live. Give us your briefer here and sell your company to us. It's been really the big story of 2020 here. How are you doing in terms of your growth, in terms of the targets that you have, and especially amid the COVID-19 pandemic?
Yeah, let me start by giving a short introduction on Converge. We're the only pure play pure fiber fixed broadband operator in the country. Others are actually multi-service. We play in a market that is severely unserved and underserved. If you actually look at like broadband penetration in the Philippines, it's about 14% only. When you talk of fiber, it's only 6%. So it's a huge market that is still ripe for the picking for multiple players, in fact. And as a result of our pure play focus, we've actually been able to deliver very good results, even relative to global standards. Our revenue grew for the first 9 months by 67%. Our EBITDA margin is at 52%, and our return on invested capital is about 20%. We think that these results are a vindication of our choice of, being pure play and focusing on the market that still has a lot of room for growth. The COVID pandemic, we think, provided a kind of a marketing kick. We've already been seeing that the demand has been picking up, and it's also largely because we have been aggressively rolling out fiber in places where it did not exist before. So we are actually opening up new markets. And in fact, in some months, we were signing up close to 90% of customers who are first-time fixed broadband users. We are not growing because we're stealing customers from competitors. We're growing because we are helping to unlock the latent demand of the Philippine market.
All right, sir. Given that, how exactly? Yes, you're saying here you're in a fixed play market here. But how exactly do you set yourself apart from the incumbents here? We're talking about competing against two giants here. How reliable really is a connection here when it comes to Converger? And at the same time, how competitive are your products, especially when it comes to pricing? And what's your differentiation strategy here as well?
Fiber provides an built-in advantage. It's actually very reliable. The only issue is when there is a cut, which, by the way, applies to any technology, whether it's fiber, DSL, or coax. We have a brand new network. We have the newest network in the Philippines. And as a result of that, we've been able to buy and deploy the latest and greatest technology. We announced a few months ago we had the first 400 gig backbone. That's 4 times the capacity of legacy technologies. GPON actually runs at gigabit speeds. So, today our lowest speed is 25 megabits. We can bump it up to 1 gig if necessary when the time comes. Our product is actually very competitive. The entry level plan is 1,500. And the speed is a minimum of, not a minimum, the speed is 25 megabits. So that was specifically designed to address the needs of the market today and to allow Class C and above to enjoy fast and affordable broadband, which was not available before. So I think that's a key point I'd like to make. So our target market is really the middle class and above. So the rest of them are actually being served by wireless technologies, whether postpaid or prepaid. And as part of being brand new, the network is relatively less prone to problems. Of course, when you have a typhoon, all bets are off. But in terms of reliability, obviously newer equipment would have less chances of failure.
Sir, I'll just follow up on that question because competition is key here, and you've seen that during this COVID-19 pandemic, it has actually accelerated the plans of even the incumbents because this is really the time to be serving the needs of for fiber and for connectivity. Will that in any way affect your targets? For the next few years, you mentioned that you were growing not because you're stealing customers, but because there's simply an untapped need for that. And will you be looking at other areas? You mentioned in your press release you're looking at Mindanao, you're looking at Visayas. Is that going to be your strategy instead of crowding out the market and changing up the technologies?
Firstly, competition has been here for the longest time. I mean, I've been here for more than 4 years now, and competition has been here from the first day. And despite that, we have grown to the extent of what I discussed, 67% revenue growth. The competitors have also grown. So again, it's a vindication that the market is really very large and underserved. For Converge, there are two approaches. One is what we call go deep, where we already are. We're still adding ports. There are a lot of areas where we're sold out. There are areas where in Metro Manila where we're still not present. So we're still building where we are today. The second is go national. Today, we already operate from La Union all the way to Sorsogon. And as soon as we finish our domestic backbone, which has a lot of submarine components, which we expect, by the way, to finish by the second quarter of next year, then we will begin to operate all the way to Mindanao. So the next phase of the growth is also coming from new areas and, specifically underserved areas.
Mm-hmm.
Well, which particular segment of your business here are you really banking on? Or is there a better growth here when it comes to residential units? Or are you seeing as well good increases here when it comes to your enterprise unit?
Residential is actually our fastest growing market. It is the largest in terms of volume and in terms of potential. But if you look at the enterprise market, we're also growing faster than competition. So in a very difficult situation during the pandemic, we still grew 15%. If you look at comparables even globally, enterprise business is either flat or declining. So as we build out our network, as we increase our capabilities in the international submarine side of things, we are very confident that we can also start to grow our enterprise business. But for now, the fastest growing really is residential. But by the way, we're already a player in the enterprise. By estimates, we're probably number 3 already behind the two giants.
Sir, let's talk about the third quarter financials. As you mentioned, stellar quarter for you guys, 67% increase in revenues. Is this, to what extent is this sustainable? In the sense that, was this because of the lockdown? Were you seeing these figures even before 2020? And can we expect this type of high double-digit growth moving forward? Is your strategy here that of volumes or that of competitive pricing, so trying to penetrate the market with pricing, or also cost cutting when it comes to your bottom line?
Well, firstly, we have been growing at this level since 2016, 2017. So it's not unique to 2020. Obviously, the levels are very much different. 2020 is a very huge number. In terms of growing the revenue, yes, volume is definitely one of the key drivers. The other piece is what we call as ARPU. So we have a lot of initiatives to try to improve the ARPU. So for example, we still have a cable modem business where ARPU is lower. So we're aggressively overlaying this and migrating customers upward. Second, our existing customers, we have very innovative add-on plans. For example, for the price of a Starbucks coffee, you can get 10 megabits more of bandwidth. Imagine 10 megabits more of bandwidth is like 3 Netflix streams or 3 Zoom meetings. So our growth really is coming from two angles. One is growth of volume. Second is improvement in ARPU. And the growth of volume is going to be supported by our aggressive nationwide rollout, where we go to new places. Let me give you a very nice example. Diet Camarines Norte. Diet is in Bicol. It's 16th out of 17th in terms of GDP per capita. So it's not one of the richest areas. There we have 50% utilization on 8,000 ports. And that is based on the fact that we did an on-the-ground survey. So we only rolled out where our customers exist. And again, this is Class C and above, people who can afford 1,500 or more.
Okay. Sir, final question here, especially on your IPO and financing and your future plans and what you're going to do with your money. What drove you to do an IPO in the most volatile periods of the market, knowing that there would have been a risk of a discount in your target price? And especially on the back of you already having a giant, Warburg Pincus, financing your plans. To what extent is this IPO changing your growth and CapEx plans?
Well, first, let me state that it is a regulatory requirement. We are supposed to list the company as a utility by 2022. So one thing
Okay.
we certainly don't want to do is do that in an election year. Number two, based on our operations pre-2020, we did see that the demand is really there, and there is a need to really fast track deployment of high-speed broadband in all of the key locations in the Philippines. And to do that requires a lot of capex. So yes, Warburg Pincus did bring in some money. We did avail of some financing, but there is a need to really find more sources of financing. So that would be the second piece, which was go IPO and raise more funds to allow us to roll out faster than ever before.
Okay, so also preempting the necessary requirement, nevertheless, and also supporting your expansion plans. You've got Converge trading now at 15 pesos and 98 centavos. Thank you so much for your time and insights. That was, of course, Jesus Boboy Romero, COO of Converge.
Thank you, Danny and Jester. Good
Thank you,
morning.
sir.
Thank you, sir.
Thank you.